coronavirus as well as the domestic demand and the mixed quarterly performance that the company reported. To discuss all of these issues, we have Rajesh Bhatia of UFlex joining us on the phone line. Mr. Rajesh, good morning. Thank you so much for joining us. First of all, if you could tell us, your 9-month performance has been a tad bit tepid. In terms of the Q4 performance, how is it shaping up, and any outlook for FY21 given the fact a lot of your capacities come on board?
So I think the Q3 as such has been pretty good for us. Insofar as there has been a EBITDA margin expansion, we can clearly see probably this is the first time in many quarters that we have achieved the 15%, and operating EBITDA margins. While the net revenue and the volumes are a bit low because of the closure of one of our facilities in Dubai because it's being relocated to Russia. But still the profitability is up, driven by expansion of the margin, and also the fact that there has been a notable 10 to 11% volume growth in the packaging business, which sounds well because that's the business which we've been trying to grow the volumes for, making efforts for many quarters now. So, it's been a very, very decent quarter for us. And we hope to continue to build on the volumes as we go down the line.
Right, Mr. Bhatia.
Our expansions now get into play in FY21 for the partial period. But FY22 will have a real, impact coming out of those expansions.
All right, we'll talk about that in just a bit, Mr. Bhatia. If you could clarify to the street, if at all you have any sort of exposure in terms of supply chain or maybe, sales to China or in exports, what is your export revenue contribution to the overall revenue? And has this China shutdown on account of coronavirus impacted your business, your prices, or anything in any way?
So let me tell you, so out of India turnover of about, you can say 4,500 crores annually, we do about 600 crores of exports from India of packaging, of the packaging products which are exported to the various countries. And and then we have international plants which are selling all their output in the local markets as well as exporting to other countries. But from India we do export about 600 crores, and we're not impacted by coronavirus at all because none of our raw materials or none of our finished products are traded in those markets. So, there is very, very limited things that we get from China, and that also could be in a very small quantity, and we have, the options to shift to other Southeast Asian countries where, we can source it. Some of the paper things and all that may be, the things which we import.
Right.
But, not much. So we're not impacted in any which way from this coronavirus.
So, Mr. Bhatia, not directly impacted by coronavirus, but it has had an impact on crude prices, and that indirectly impacts the spread that we see on BOP as well as BOPET. What are the spreads currently, if you could tell us that? So,
on a year-on-year basis, I can tell you that BOPP has had Q3 versus this Q3. We had at least the gross value margins going up by at least 35 to 40% range, depending on the product. And in the BOPET films also, there has been around 15 to 20% improvement over the gross value margin in the BOPET also.
If you could tell us, Mr. Bhatia, the absolute spreads that you have on BOPP and BOPET in the fourth quarter so far, how did they fare in the third quarter? And how do they compare to the quarter ago?
So, in the Q3, the spreads were, in the BOPET were about, 50 to 55 rupees range. And in the BOPP, they are about 50 rupees range. while we had 38, 40 rupees in the last year of Q3. So the BOPET prices and the BOPP prices were probably the lowest in Q3 and Q4 of the last year, and have been steadily recovering from there. So the margins are improving on the BOPP business side.
And this quarter so far, these spreads of 50, 55 and 50, have they held on?
Yeah, they are. So to the extent the raw materials have gone down, so that is passed on to the consumers. But I think the spreads are maintained.
So, Mr. Bhatia, you're saying you have passed on the benefit to the consumers. So, in that sense, is there any more upside to the margins, or most of it has already been passed on?
I think industry as a whole will be happy to sustain these margins, and even if they have to give away a small percentage here and there because of anything.
So overall margins to sustain around the 15% level, you're suggesting?
So I think the margins in the packaging films would be much better today as compared to the packaging. So when we were talking about it, we were talking about the packaging. So the packaging margins, films margins is what I would expect that
so around 12%
would like to. Maybe a bit more also, maybe around 16% margins in the films business.
Mr. Bhatia, let's talk about your aseptic business and your flexi packaging business. What sort of revenue outlook do you have for the flexi packaging business and aseptic business? What's your current capacity utilization, orders on hand? And you had a 350 crore rupees sort of guidance coming in for FY20. Are you on track to meet that? And the next year's guidance would be what?
So I think we have in the current quarter that is ongoing. In this quarter, we're seeing almost 200 million packs, orders being executed every month now. So which translates into about 70-75% capacity utilization. So also understand that this is the period during which the peaking happens. So from January to let's say May or so, that is what is expected. And after that, we'll have to see as to what the capacity utilization remains. But at least for the next 5 months or so, we are looking at minimum 200 packs. 200 million packs a month.
Where does that 350 crore revenue guidance from this business come at or stand at for FY20?
So FY20, I think we will not be able to sort of achieve that. So they'll be under underachievement in FY20 as such.
Okay, Mr. Bhatia, thank you so much for joining us. So the company is saying that they're not impacted by coronavirus. The margins as far as the packaging business is concerned is expected to inch higher, but they might not be able to meet the revenue guidance of 350 crore that they had earlier provided for the business. But it's time now to slip into a very short break. On the other side, we'll get you more on the markets and tell you about a lot of stuff.